Hello everyone, welcome back to the RationalInvestor.com's Daily Brief Recap. Actually kind of cool to see. I think we've talked to you guys recently about how we're...
Hello everyone,
welcome back to the RationalInvestor.com. So that's good to see. Sort of using the dashboard as it gets filled out here as our proxy on our developer cycle. So it's really cool to see slowly making progress. Every time I do these daily brief recaps, we're just filling out the information. I'll know that we're ready to go when all of our screeners start populating here. So good to see that TRI is taking advantage of this developer cycle and slowly building out the tools to make us better traders. For this free video, I like to put together just a quick little chart deck, and we'll just talk a little bit about what we see happening in the market and just give you an idea of sort of what I'm seeing in the market. So here we go. As always, not a bad idea just to check in with the good old US dollar index and see what is on its mind. As you can see, we are pressing higher after yesterday's pretty violent move to the upside. And as we've sort of reported of late, that's not what I wanted. The weekly chart still pointing up. Inside bar bullish reversal with yesterday's price action on the US dollar index. And I think I even pointed out in this free video yesterday, big weekly gaps that need filling to the upside here. Big fat round number, 100 points on this dollar index. And in a weird sort of way, I often see this happen where you can get the market to park itself in sort of a channel here. This happens to be a rising channel. And sometimes, obviously this is just a prediction out of Brian's butt, but sometimes you actually get an equal-sized violent move on the other side of the channel break. So I'm certainly not going to be calling tops in the US dollar index here anytime soon. And as I think we pointed out, moving average systems, all that kind of stuff, still pointing higher. And really, I don't think anybody should get in the face of that. If you just think about what's going on in the world, Asian economies, are they expanding? Not really. Are European economies expanding? Absolutely not. They're actually, German data is showing contraction right now. I think I mentioned that there was a tweet that a gentleman put out. I put out that retweeted his comments about the fact that usually when the U.S. short-term interest rates are higher than everybody else's short-term interest rates, that doesn't bode well for the world economy. And I think you can make the argument part of this is everybody is just getting the hell out of risk assets and parking their money in T-bills. And the Americans are paying you higher than everybody else in the world, so why not buy the American T-bills? If we look at risk on proxies, we always like to just take a quick boo. What kind of day is it? Stocks are trying to hold their lows, but I get the feeling that the market is extremely heavy right now. And we've gone through that cycle pivot that I talked about, the 25th of September, which was yesterday. So now, believe it or not, I actually have to think about literally the next month of the stock market being sort of very malaise. How deep we go here, anybody's guess. We are at 38.2s right now, just off of this hourly basis. You can see we're sitting right at a channel midpoint. If we lose this channel midpoint, then we're probably going to have to come back down and fill in all these gaps. Never did get my third purchase off, which of course I was cross at myself, and people even on YouTube were like, don't beat yourself up, Brian, next bus. So thank you for that positive sentiment. I do have on about half of my desired short position, so I'm just going to work that. Any kind of counter trend rallies back up against the top of the range, I can take a look at buying some more. There is this gap still sitting out there. And we'll see how it goes over the next week or two. But if we do just melt down here, lose these lows, then my hunch is we probably got to come back down into this area next. And interestingly enough, we did options open interest, and the heaviest put open interest on the S&Ps, ironically enough, is actually down here at 290 area. So Wall Street will be, actually, in my opinion, relatively happy, even if the market comes down another 10 points here on the SPYs. So, I mean, I'm not making any grand predictions as to what's going to happen. We're obviously at a key pivot. All I'll simply say for today is risk on versus risk off. It feels like a risk off kind of day. We've talked lots, of course, recently about the oil market, tinfoil hats, all that kind of conversation. I still think that this move up here was entirely manufactured to save Wall Street's ass. And notice that as soon as we got the other side of that expiry, all we've done is just made new lows. Gaps still to the downside on this crude, about $1 lower than where we are right now, and there are some cheeky gaps all the way down here. And it was actually interesting. I was looking at sort of an aside. I don't know whether I have enough time to do this today, but I was looking at stocks like Chevron. And actually, I don't even think they call it that anymore. But anyway, CVX, I think they still call it Chevron. And you look at a chart like this, right? They always say oil, the stocks always lead the commodity. Hopefully everybody can see very well-defined potential M up here. We rally back up into reload zones, and look at the polite little M that they've put in up here. So very difficult for me to be bullish of oil. And again, was there some finessing going on here to get prices up above certain derivative levels? You know my thoughts there. All right, so moving on. That's a little talk about oil and sort of risk on proxies still looking heavy. Interesting correlation I noticed going on here. I don't know whether I retweeted it out or not, but Mr. Fundstrat, Tom Lee, I think his name is, yeah. He likes this argument that crypto and Bitcoin is a risk-on type asset. Even in the headline, it's called unpopular. And of course, crypto people would like to believe that, crypto is crypto and it's not correlated with the broader market. But, I look at like data points like this. We'll talk a little bit more specifically about Bitcoin in a minute. But, I mean, look at how this is the Russell 2000. This is basically the small cap stock index in the States. And again, kind of like that Chevron, we rallied up against the top end of the ranges and then failed. But look at this beautiful little top right up in here. And then you look down at something like crypto and Bitcoin and look at the top that came in here. I mean, I got to say, these things are moving very closely. I would like to be able to get like a Schultz index and compare that versus Russell 2000. But, small cap stocks, and, we play a bunch of small cap stocks on the site. They're all, getting their asses kicked, for lack of a better term. And I'll show you one in the crypto space that I'm pretty close to getting stopped out on. I just thought I'd mention it here, that I believe that, there is a pretty close correlation. I guess it disconnected a bit there, but interesting rally peaks in here, rally peaks, and now trough, 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 trough. I don't know whether we're done here yet to the downside. You still see this big old gap on the chart. And of course, Bitcoin lost its lunch here. So I think that there is validity to Mr. Lee's comment here. And I'm actually part of that group where I do believe that Bitcoin is part of the risk-on sort of environment. And if anything, in a weird sort of way, I do actually think that Bitcoin actually kind of telegraphed this weakness in risk assets that we're seeing here recently. Moving on, like I said, few names. I didn't, and I reported this, I didn't really take too many actual cryptocurrency trades. I did more this sort of recent trading through stocks that are crypto related. And you can see, just like everybody else in crypto space, my resolve is being seriously tested here. We're at 181 on this thing, and I've reported recently we lose this 176 low, and I'm gone. So basically, I've got about a nickel of wiggle room here. And if it fails, it fails. It's just the way it goes. If anything, measure Brian's professionalism by whether he actually does act if this level is taken out. If a month or two from now I'm still talking about being long this thing, then that's a problem. But long and short of it here, I'm more than happy to lady up for Colleen's sake and just simply state that my bottom thesis was wrong and strong opinions loosely held. You know how the story goes. So I haven't been stopped out yet, but just wanted to report that I'm feeling the pain just like everybody else in the crypto space who took these potential bottoms. And I might have to just simply walk away. It's definitely possible. If we look specifically at the cryptocurrencies themselves, Bitcoin, interestingly enough, and big shout out to Andrew on the site, who and I really love to see this because it just shows that he's maturing as a trader. And he's got his shit together. Andrew did report that he did take this bot short, and he was in this trade. And as I think I even tweeted it out this morning, we actually had where the hell is it? There it is. We had AB equals CD objectives actually get hit this morning on the dump. Now, I get the feeling that this move is getting a bit old now, and I think it's actually done, but, only time will tell. Harmonically, we've hit this objective. I think that's important. Then if we zoom out, you also notice too, oh, gee whiz, isn't there a guy that we like to follow who used to always make money as a goddamn crude oil trader and who just religiously buys 61.8s? So we'll put his icon right there, right on that 61.8 fib of this entire range, and you tell me, is Mr. Mountain Man active in the market this morning? I mean, this is ridiculous. I mean, it used to drive me nuts trading crude with him because, after the fact, he's buying here, the price zips up, and he's like, yeah, well, I'm long from this level. And you're like, you son of a bitch, you did it again. So look at how we just basically tagged Mountain Man level there and just said, all right, get me out of here. Now, I don't know whether that's going to hold as a low. What I will say, like I said, hats off to guys like Andrew. We had this beautiful diamond that I was talking to you guys about. Very sloppy. I got stopped out of my little bot that I had on. Small profit, but big fucking deal. I missed the big move. And this thing just M'd out so nicely. Like if we put this on a clothesline basis, I mean, look at that M right off the goddamn bot level. But anyway, that's here nor there. Inside bar reversal, I do think that was a sell signal. And I even said that, and I put this out repeatedly in the public, and learn from this stuff, people. I'm not here to tout my own horn. I mean, when I do have winning trades, I'll let you know. But, I mean, all of you guys, take a screenshot of this. Learn from this. That's the whole reason why I'm doing this, is I want to make a positive difference in the world. Inside bar reversal, boom, down we go. But now this move, I think, is getting a bit old in the tooth. And then the last thing that I'll mention, even if we just look at things like profile, notice that this was the original double bottom that actually started this rally. So you could make an argument that the smart money, they buy down markets. Somebody stopped the bear slide here. This is where the smart money is long. So ironically enough, it's into this low, this low, this low, even this crazy tail low, these lows. This is where the smart money is actually going to defend their trade. And notice that basically that is the move this morning. Boom, right into that level. So I'm not going to call bottoms. What I'm just going to simply say is I think that the down move is done. I'm very, very proud of people like Andrew on the site who had patience and discipline and simply waited and waited. And a lot of people tried to convince him to go long up through here. And he was just like, no way, man, I'm not touching this. So way to go, Andrew. Big hats off to you. In fact, Shane and I are going to go out for some sushi in the next few days, and I'd love for you to join us. and recount your tales of success. Nicely done, sir. So I think that the down move feels like it's getting exhausted, and I wouldn't be surprised if we start seeing divergences. If we go down to things like 4 hour and then pull up, momentum studies, do we start seeing higher lows out of our momentum indicators? Just for fun, let's see what happens. Sure enough, move to new lows. Look at that ABCD. It's dojiing right on that damn level. And of course, look at MACD. We're nowhere near new lows on that event. Now, this isn't enough to call a bottom. What we'd ideally like to see is us test this low, then turn back up and confirm the W. We'd also like to see the bears fall asleep. Notice that the bear volume on this dump is lower than this high. So you can see there's early anecdotal evidence that the bear's starting to fall asleep. It's still very early, but the way that I'm looking at this right now is that's the end of the move, not the beginning. Finally, we'll finish off today with just a simple comment about altcoins. Obviously, they had a lot of their potential bottoms broken. This Ethereum, and this is Ethereum Classic. I'm not quite sure why I have this on here. This Ethereum trade, we talked about the double bottom in here. 50% of the anticipated move was hit, so move stopped to scratch. And here, guys, I have to say, this is where you have to act as a professional. If your bottom is broken, you have to respect these lows and you have to walk away. Just like that Riot. If my lows get broken on Riot, I gotta walk away. So at this point, I really, maybe, and I think I even said yesterday, maybe we carved out an inside bar reversal. That's clearly not the case. The inside bar, the lows of it failed, and we actually made new lows this morning. So I don't think it's a good idea to be a hero here and call bottoms. What I'm just going to simply say is we had a thesis for a bottom. That thesis was negated. Time to just simply get into capital preservation mode and basically walk away. And at this point, you wouldn't even be really interested in what's happening here now. So that's the sort of state of the market right now. Still feel like, look at this Chevron coming off a good chunk here. Still feel we're very much in that risk off kind of frame of mind now. As long as the crude still needs to fill in these gaps to the downside and things like the S&Ps and stuff are still looking heavy, I don't have any reason to be bullish here. And if anything, I've talked to you about this before. What I really wanted to see was the risk off assets rally up into trade windows to actually give me an opportunity to start thinking about short. And we're just not there, right? We got up. Yen nowhere near, bonds nowhere near, so I just have to be patient. And my hunch is as these work their way up and top out in these zones, the stock market and crude oil and risk assets are going to be soft. Okay, I think we'll leave the summary at that for today. I hope you enjoyed the broadcast. All the best, and bye for now.